Hello, everyone. Welcome to a new episode of Baiguan Radio. Apologies that we haven't done a new episode in the last, I think, 2 or 3 months. This time we invited Johnny Zhou of East Aid again because I've been talking with Johnny about this very interesting topic of whether the RMB has been undervalued and whether appreciation of RMB is the way to go. It's a very important topic. Johnny, you want to say hello to our audience?
Hi everyone, it's been a while, but glad to be back.
Yes. So let's just dive right into this. So I think I've been observing that there's a growing voice, at least, that RMB is undervalued at this moment. I've been seeing people citing all kinds of evidence. For example, people point to that the price levels in China has declined greatly compared with its trading partners since at least 2019, while at the same time, the productivity in China has grown, yet the exchange rate has barely moved. A few weeks ago, we also featured a series of studies by CF40, which is China's top economic think tank, which compare the same basket of consumption in China with many other countries like the US or Mexico or Japan. And CF40's researchers also reached the same conclusion that if we judge by the same basket of consumption goods across the nations, it seems that Chinese prices has been greatly depressed, but also at the same time, it probably suggests the currency is undervalued. So naturally, there has been a growing kind of chorus of voices calling for appreciation of RMB. For instance, a few days ago, Mr. Shan Weijian, the legendary founding chairman of PAG, one of Asia's largest PE funds, Mr. Shan published an opinion pieces on Financial Times, arguing that RMB appreciation would both boost domestic consumption and reduce trade imbalances and trade disputes, two big problems of our time. All of this seemed to make sense to me, Johnny, but I know you, who was a scholar of economic history, seems to have some disagreement with this view. I'm really curious to hear about the specifics. And also, I guess our audience will be very curious as well. So could you elaborate a little bit for us? First of all, do you think the RMB is undervalued? And secondly, if so, do you think it should be appreciated?
Yeah, Robert, that's a very deep question. I think about 1 to 2 years ago, when China is still trying to get out of the COVID fiasco economic wise, I think a lot of people are pointing towards that RMB should depreciate because of various reasons. But today, now everyone is talking about an appreciation of RMB simply because the economy has rebounded a little bit in terms of the market performance, especially for Hong Kong stock this year. I think overall the performance has been great. But I'm pretty skeptical of two reasons. I think the first thing is very simple. It's a rule of thumb. Basically, if you let RMB free float today, let's say we just let it free float, do you think it will go up or down? I think it's very likely it's going to go down. And that's because there's just a lot of onshore money that is willing to go out to invest in foreign assets. So basically, a lot of financial assets were, you can call it trapped in terms of on an onshore perspective. And I think that's first and foremost the biggest issue is that, okay, if you're talking about central bank is setting the exchange rate, but actually they know if it went free float, what is the direction going to be? And I don't think appreciation is the high likelihood of a direction to be. This one is a bit intuitive, I would say. But the second one, I would say, is more analytical, is that we only look at trade or goods sector right now when we are talking about the relative productivity of Chinese economy or the thing we produce or the goods we eat, these things are relatively cheap. But on the other hand, there's another flip side of the coin, which is financial assets. And within the household sector of China, the biggest proportion of the financial assets is real estate. And there's a lot of data, but I can just quote you some. In 2022, I think the official Chinese Academy of the balance sheet studies, they figure out like the real estate accounts for 47% of the sort of residents' assets, right? And PBOC back in the days, they did a research, and at that time, the sort of proportion is even higher. It's 59.1%. And there's our studies that showed it could be a higher number. And what does that mean? It means that real estate is so important in the overall residents' balance sheets. And if that price sort of fluctuates or has some implications, that will have a huge impact on the overall balance sheet of the household sector, as well as the exchange rate. Now, then we are talking about, if you look at Chinese real estate prices compared to the rest of the world, let's say compared to some of its neighbors like Japan, Korea, Southeast Asia, is it overvalued or not? I would say in a lot of sort of comparative studies, Chinese real estate is still quite overvalued, especially in the first tier cities. You see a lot of price corrections already in lower tier cities, but compared to the income of the Chinese residents, I would say it's still hugely overvalued. And if you don't take that into account, and then you talk about exchange rates, say, okay, Chinese produce a lot of cheap goods and very high quality products, and you say, okay, then we should just appreciate. I think this is a very unbalanced, or at least an incomprehensive account of what's really going on. So my point is that because of the real estate is still undergoing the correction, while the Chinese trading sector is, you would say, a bit undervalued, then we're pretty much still at a kind of an equilibrium right now. I don't think there should be a major movement in terms of exchange rate, which is exactly what PBOC is doing. So I think the government is doing the right thing, balancing the two, and there shouldn't be a drastic action regarding financial asset appreciation right now. But people have different views, and then that's normal. But I think my account is quite comprehensive, and it looks at not only the trading sector, but also the sort of the financial assets and the balance sheet of household, which I think is very important.
Yeah, I think this is a very interesting take compared with many of the other analysis I've read. It's true that none of them seems to mention the real estate market, which is, I agree with you, still overvalued compared with the income. Operationally speaking, for the people who are not familiar with economics, can you elaborate a little bit on, for example, if we are to appreciate the RMB at this moment, what will actually happen to the real estate market? What does that actually mean in practical terms?
Yeah, that's a very good question. I think the underlying mechanism is going to be pretty complicated. But I think the sort of the thesis is that if RMB appreciates, which means some of the other financial assets also appreciates, right?
Yes.
There could be some money moving out of the other financial assets and flowing into the real estate sector, which will make the real estate prices higher. So the natural sort of sequence will be, okay, you have an appreciation of the exchange rate, and then the real estate asset prices will go up. And that's the typical sort of mechanism that will work in a very classic construct. But if you look at the reality right now in China, even if, let's say, there is a slight appreciation of the RMB, I highly doubt that there will be money flowing into the real estate sector. I even think there will be more money coming out of it. just because people find that, okay, the RMB cash may be generating more yield than real estate. So I may move out of it. So the real world account is a bit different from the classic, the economics that we're talking about. So that's also a very interesting sort of analysis in that I don't think the appreciation will help China's real estate. In fact, it will cause even more problems going downwards. Yeah.
You mean the free floating of exchange rates? It could actually depreciate in the beginning.
But
Yeah.
we are talking about when we are talking about free float, it means that China will also open its capital account, right?
Yes.
And if China opens capital account, I think I wouldn't say it's a 50% of the household, but I would say a very large proportion of the household, they would just sell their houses and move their money to overseas assets. That's the reality. Yeah.
Yes.
So a lot of the economists and the foreign sort of media and stuff, they don't understand the underlying psychology of Chinese households, but that's the reality. And that's why there's never been talk of opening the capital account, and there will never be a real free float exchange rate. It's always an equilibrium to balance out the potential capital flows that may cause a huge destruction towards the economy.
Yes. So what's your take on the long-term trajectory of RMB though? I mean, do you think this kind of situation will persist for a very long time? Or in what situation will you think that, first of all, they will let the exchange rate free flow a bit more? And also, in what situation will they allow RMB to actually appreciate?
In terms of the long-term trend, it really depends on the relative economic performance of China, right? And also, we're undergoing like an asset, at least deflation bubble within the real estate sector. So this is concurrent. So if Chinese economy continues to grow and the sort of real estate prices becomes more normalized, meaning that the actual yield of the real estate asset is considerably better than it was, say, right now, then you could see an appreciation of the RMB. And there's another hidden factor is also the global usage of RMB, right? We're talking about trade. And if, say, RMB were to appreciate, then it should mean that a lot of trading partners are willing to hold more RMB because it's going to appreciate, right? It's very simple economics. But if, let's say, there's less people willing to use RMB in the trade, then it also means that we shouldn't appreciate, right? And I think right now, in terms of global usage of RMB, it's more of for trade facilitation rather for holding RMB assets, right? It is more, okay, if I hold RMB, maybe the trade will be facilitated faster, or it's easier to control exchange rate risk, and so on and so forth. But a lot of the trading partners, they haven't thought from the asset angle. Oh, actually, I should allocate 5% of my foreign exchange reserves into RMB. Then it means it has a real case for appreciation.
Yeah.
But I think the key reason why people are still not doing that is two. One is obviously we are not a capital account free or capital account open country, which is a huge factor played into this. But I think the second issue is that if you look at a lot of the assets within China in terms of from a yield perspective, it does not necessarily mean a higher yield comparatively speaking with the rest of the world. So if you're talking about like asset investing into financial assets, it's a very different perspective from trade facilitation. So I think that also plays a factor here.
Yeah, it sounds like to me like just a kind of a chicken and egg problem. So on the one hand, for RMB to really free float, you need people to, as you said, hold it as an asset. But on the other hand, they will not want to hold this as an asset because first of all, you do not let capital control relax. And then also because of this, there's a trapped financial assets inside China, you don't have a very good yield on the assets, right? So that kills the willingness to hold. It just sucks to me like a chicken and egg problem that would just go on like this for a very long time. Is that the right kind of assessment?
I think it's the right assessment, Robert. I think there is a further issue to that. It's also a very important point that I think a lot of people fail to really account for when they're doing the analysis of RMB appreciation is that right now the treasury yield of the US is much higher than the Chinese bonds, right? The sovereign bonds. So this gap is pretty wide right now. And if this persists, you're not going to have a very good case for appreciation, at least in the short term, because still people use US dollar as the major sort of reserve as well as trading currency right now. And if the major currency in the world has a higher yield than you do, how are you supposed to keep on the appreciation? I think there's only one potential route is that, okay, there's a cutoff, meaning that there are some countries who cannot use RMB or US dollar assets and they have to. Okay. The case being like Russia or Cuba or something like that, right? If that list goes longer, then I would say, okay, you have a case for RMB because there are just a lot of bloc countries that cannot use our US dollar and they cannot invest in higher yield US treasuries. And then what's their options? They're going to just invest in RMB, right? But I think there's not such case right now. So I think that's also partially or even a lot of the reasons why the PBOC is very sort of prudent in terms of RMB appreciation, as well as relaxing the monetary policy, because the interest rate is already pretty low. And if they lower it further, what will be the implication on the exchange rate? There will definitely be implications on the exchange rate because it's never a one-dimensional chance, right? It's a three-dimensional chance. It has relation to financial asset performance. It has relation to real interest rate, right? It has relation to international relations, right? So these things all plays into the factor that, okay, maybe staying in equilibrium right now is not a bad move. I think appreciating RMB right now does not bode well for the Chinese economy, and it could have even a side effect going onwards.
Yes, just to summarize, I think what you're saying is basically that in terms of the goods, yes, the RMB is undervalued, but in terms of financial assets, which also include real estate, but also many other assets, it is not. It's actually could be overvalued, the RMB. Is that like just if we just let our audience live with one line, is that something like that?
Yeah, that one line is very accurate. And I want to add one data point just to put things into perspective. Last year in 2024, the Chinese sort of trade volume in total, including the import and export, is 43 trillion RMB, right? But the entire financial assets of the household right now is 325 trillion RMB. So it's very different. We're talking about very different numbers here. Trade is only a part of the economy, and it could be even a very small part of the economy. It has a huge flow effect because, okay, if you make money during trade, you have a trade surplus. Sure, it will have a positive impact towards the economy in the marginal terms. But if you look at the entire financial asset in terms of volume, it's a very different story, right? So obviously, we're also comparing apples to oranges because you can say, okay, trade is a flow figure and the financial assets is a stock figure, right?
Yes.
Flow and stock cannot compare to each other. But I also want to say that, okay, but even if you look at the sort of flow figure for financial assets, like this year, the overall increase of RMB sort of assets is 8 to 10%. Oh, so you're talking about like similar numbers here, right? You have 40 trillion in terms of trade and 40 trillion in terms of financial asset growth. And so you cannot just talk about, okay, because of the trading sector, we're undervalued, then we can ignore the financial asset performance. I think that's inaccurate. But people have different views, and some people would say, oh, Chinese stock market is undervalued, and that makes a strong case for appreciation of the yuan. But I would say stock market accounts for so little of the overall financial assets within China right now. So it doesn't really makes a lot of sense to say, okay, the stock market's undervalued means that the overall exchange rate is overvalued. That's also a kind of a oversimplification of the issue.
Makes sense. So I think you talk about trade, right? And I think one thing that's really making the RMB appreciation topic quite widely discussed right now is exactly because of the trade imbalances right now. The Especially from US perspective, from the European perspective, they would want to have a healthier and more balanced kind of trading relationships. So many of the people from that background, from scholars to investors, they tend to seize on the topic of RMB currency exchange rate as one of the solutions to the trade imbalance. But as you said, if the RMB is not going to appreciate, at least not appreciate rapidly and significantly right now, what do you think would solve the imbalance? Or is it just basically unsolvable at this stage? What's your take on that?
My take is actually in the earlier programs I talked about it, right? I think there are actually three tools within the overall macro management of a country's economy. One is of monetary policy and fiscal policy, but there's another thing called industrial policy, right? And I think the government is trying to do the sort of the reduction of over involution or there's a price competition between different sort of companies. And I think pricing is also very important, right? Let's say if Chinese electric vehicles can raise their prices by 20 to 30%, right? Then what will be the impact towards their overall income overseas? That's a study that the overall industry should do, right? If that's the case, then okay, then it means that foreign cars in terms of prices could be more competitive, but it also means there could be higher revenue generation for sort of Chinese companies. So I think there's the issue of pricing here. But the conundrum right now is actually for China is not really because the government doesn't want companies to raise their prices, but actually there is regional competition, right? Let's say Shanghai has an EV company and Guangdong has an EV company. Okay, who will raise the price first? Be the one that is a disadvantaged position. But let's say, okay, you do a disadvantage sort of price raise and the other sort of province benefit from that. That's not doable, right? Because right now, Guangdong and Shanghai is a very bad example because they are actually in a pretty good fiscal position. But if you're talking about, say, the provinces that are relatively poor or sort of the fiscal capability is relatively low, I think they rely a lot on the revenue coming from these companies, right? And you cannot be uncompetitive in terms of this issue. And so the pricing issue is more complicated than just say, oh, the central government decide everyone should raise their prices by 20 to 30%, and it can be done. But it's not like this because there's a lot of regional competition, there's a lot of local regulatory issues that are tied to it. So I think this is a more complicated issue, which is exactly why it cannot be resolved in the very short term.
Very clear. We've done a very thorough discussion of this topic. I personally also learned a lot from your sharing. I think in the future, we will have more of these kind of episodes where if there's some big topic coming in, we just hop on this and have a quick and clear discussion about this topic. And thank you, Johnny, for taking the time.
Thanks, Robert.
Yep.
Hope to see
See,
you soon.